have one more presentation and one more panel conversation before we wrap up today. We thank you for staying up until this time, and we thank Yon and his distinguished panelists for doing justice to a very critical part of real estate, which is residential sector. I mean, one of the most important needs of man is shelter. So residential sector is a very critical conversation. But very quickly, to take us through a conversation and a presentation on capital flow in West Africa, I would like to invite the Research Associate for Africa at Estate Intel. Please make welcome Tilda Mwai for her presentation on capital flow in West Africa. Thank you very much.
Okay, good evening, everyone. I hope you're doing well. I'm very aware I'm the only thing standing between you and your cocktails, so I will make this very fast in terms of moving on with the presentation. So my job over here is very simple, and it's basically to wrap up the type of conversations that we've had today. And because the theme for this conference at the moment is New Frontiers, my work is to put the data to this conversation. So to do that, I will be presenting our Africa Real Estate Deal Flow Tracker. And this seeks to, what we have basically done as Estate Intel is to put together different transactions that have taken place over a number of years across the real estate market in multiple countries, and trying to see what that data is telling us, and that's what I'll be presenting today. But first, okay. So in terms of but first, just a little bit about Estate Intel. We are a Pan-African real estate data bank, and we basically track multiple markets across Africa, and we avail this data for decision-making to different market players. Why am I struggling with this? Okay. So essentially, as I mentioned, we've put together this multiple data across different markets. And the key thing that we are trying to establish is to see the patterns and trends that are taking place in the different real estate markets across Africa. Now, on the screen, what you'll see is a brief overview in terms of what our data is seeking to tell us. So the first thing that you'll see is that between 2016 to 2022, there have just been over 4 billion worth of investment transactions that have taken place in the real estate sector across Africa. Now, looking at this number alone, it doesn't tell you much. But when you look at the commercial real estate market globally that was transacted in 2021, you'll realize that there was $1 trillion worth of transaction in the global commercial real estate market. So if you compare that with the 4 billion worth of transactions that have taken place between 2016 to 2022, then you see that really Africa is still such a niche market. But then as we will see in the subsequent slides, you realize that the market is changing and the market is growing, and that most of these deals have actually happened in the window between 2016 and 2022. Obviously, the top sectors are still retail, hospitality, office, and data centers. And the top 5 destinations for investments are still Lagos, Accra, Casablanca, Nairobi, and Maputo. So, and the top source of capital by region, we still have South Africa topping, then we have West Africa, we have East Africa, we have and we have Indian Ocean. Not sure why this is, okay. So in terms of the sector and regional deal flow evaluation, what we did is we looked at the period between 2008 to 2016, and the period between 2016 to 2021 to see how the sector and deals are evolving across the different markets. So when you look at the 2016 side, you'll notice that the top investment destination was essentially East Africa. And when you look on the other side towards 2021, you see that that pie chart is a bit more filled out and a bit more proportional in terms of where capital is growing into. When you look at the investor type and the allocations that are being done by investor types, again, you notice that investment funds were the leading type of investors in 2016. But in 2021, again, you notice that there's some investment funds are still at the top, but then you notice the debut of other investors such as private equity, and then we also have real estate investment funds, we have income funds. So there has been quite an evolution between 2016 to 2021. When you look at the top sectors, you have office, retail, industrial, and hospitality as the top sectors in 2016. But the top sectors in 2021 tell you a different story, because then you notice the debut of hospitality rising through the ranks. And I'm sure the people who have attended the hospitality forums, you've had quite a vast discussion as to why that has happened. But you also notice the debut of other sectors, as have been talked about throughout today, such as data centers. Now, when you zero into the key hubs, and that's essentially now comparing your Lagos and Accra, and also just juxtaposing that with Nairobi, the first thing that you notice is that across all these cities, Lagos has a more diverse pool of investor types. Because if you look at the Lagos side, you'll see private equity, you see investment funds, you see data center operators, you see the diverse pool of investor types. And when you look at Accra, you look at Nairobi, it's still diverse, but not as diversified as Lagos. In terms of the top sectors traded, again, on the Lagos side, you will notice the main interesting thing about this is how a sector such as data centers, which is something that we've noticed was not there 5 years ago, is now at the very top, second highest sector traded by value. And then you have other sectors still making the cut, such as office. You have other sectors such as hospitality still going strong. And then you have industrial. Accra, notably, is a much more smaller market with lesser transactions. And so you notice that activity is mainly happening in the hospitality, retail, and office sectors. And then if you compare that to what's happening in the East, and that's for Nairobi, then you notice that for Nairobi there's still retail and office, which are the much more traditional sectors, are still at the top in terms of the top sectors that are being traded. But then you still have industrial and hospitality. So what does all this mean? The main thing that we have seen coming out, and these are trends that have been spoken about throughout the day, is that number one, data centers are the new kid on the block. Of course, for Nigeria and for Lagos, you can see how that is having an impact in terms of the type of capital that is being allocated into that. Also, the most interesting thing as well is how hospitality is rising through the ranks. Previously, when you looked at the 2016 chart, hospitality was very low in terms of the top sectors traded by value. But if you look at 2021, you can see that hospitality has been one of the key sectors that are being traded. And this is because there has been a lot more action from the global hospitality operators coming onto the African market scene, and that has really steered hospitality. And also a key thing to also note is how office and retail are still continuing to be be of interest. So there has been a lot of conversation in terms of the alternative asset classes and their role in terms of providing a diversification option. But that's not to say that we are eliminating entirely the traditional classes, and you've seen that they're still playing, sectors such as office and retail are still playing a very big part of what's going on. So what does this mean looking ahead? There's some key themes as Asset Intel that we've identified will continue to impact the market moving forward. The first thing is currency and its implication in terms of real estate being viewed as a sector towards hedging of as a sector towards inflation hedging. And so when you look at what has happened over the past year in terms of currency depreciation and its impact in the market, earlier on this year we did an exercise where we looked at how much a $100,000 property in multiple African countries, how much savings investors are making on that based on the capital depreciation, if you compare that with 2021 and now 2022. So for countries such as Nigeria, you notice there's almost a 73% saving exercise. This was as at early September this year. This has definitely changed slightly, but the message is very clear that the currency depreciation aspect is continuing to impact on the real estate market. And then you can see for markets such as Accra, of course, this should be higher by now. There's a 40% savings on investors. And then you notice that other countries are having an exception towards this. Countries such as Zambia, where there's a negative 4.7 savings in terms of in terms of local currencies versus USD investments. The other theme that we anticipate will continue to drive real estate investment across Africa is the newcomers and the type of investment diversification that we expect to continue playing out on the real estate market scene. So in the previous slides, we've seen that there have been new kids on the blocks. That's data centers. We've seen industrial sector making a comeback, but we are also seeing student housing. So the data for student housing was there, although it was not critical enough to make the cut in terms of the charts, but we have also seen student housing in multiple markets making a debut, and this is going to continue to impact the type of capital play that we see playing out maybe in the coming year and moving forward across the continent. And the final thing that we expect will continue to impact the market is the green agenda. Now, I noticed Chinwe asked a lot about this, and this has been an ongoing conversation. COP27 just has been ongoing in Egypt, and there has been an entire conversation around green financing, and what this means for the real estate sector. I noticed that the panel that's coming after me is actually going to be focusing on that. And we have seen that across the real estate sector, companies are actually, major real estate companies are actually leading this play by having their net zero commitments. But also, interestingly, what's happening now specifically for investment deals and investment transactions is that we have seen DFIs, and that's your likes of the US DFC, the CDC from the British International Investment. We have seen a lot of commitments and an actual declaration in terms of green commitments, in terms of the types of investments plays that they are going to be making. And so that means there's a continued need to continue to align in terms of the green agenda and to continue to really have these conversations and adopt green in the different ways. And this also is being catapulted into the ESG strategy. So that's just an overview of the Africa Real Estate Deal Flow Tracker. Of course, there's a lot more data into this. This was just a very short snippet in terms of what we are tracking. We are always happy to have the conversation and see how this data can help you as financiers, as developers, or as players in the real estate sector. So please feel free to reach out to me or to any of my colleagues. We are always happy to help. Thank you so much for your time, and over to the cocktails. Oh no, Dennis still has a session, sorry. Okay, thank you.